So we're back on day 2 of our tribe annual meeting. We're in New York. I'm David. I'm the co-founder of LIGHTBLUE, a Dubai-based experience agency. David, thank you very much for your talk. Excellent, really insightful. Tell me about you. Tell me about where you've been, and tell me about your business as it is today.
Sure. David, I appreciate the opportunity to share with your listeners. David Tobin, I founded a group called TobinLeff. We are an M&A Advisory and an exit planning consulting group. I came from your world. I grew up in an advertising family. I started, built, and sold 2 agencies. So I had, I believe, an appreciation for what it's like to build an agency. From there, my last agency, we had an expertise to market prospect for financial advisors. We developed lead generation programs around concepts such as exit planning or succession planning. And my team and I, we really tried to dive in to appreciate those specialties because we had to market our clients that were in that world. So with that knowledge base, after I sold it, I would meet a business owner. Couldn't help myself, David. I'd say to them, what is your exit plan?
Yeah, you got the bug of selling.
Well, I got the bug. I sold it, but it was just the knowledge around exit planning and succession planning. So in 2010, I started a consulting group to help agency owners craft exit plans. And we grew from there. And a progression for us was, in addition to helping owners craft plans and prepare their companies for a future sale, we started to help them with the transactions, to handle the M&A, to help them either sell their companies or to build value through acquisitions.
Wow.
So it's 13 years later. I'm thankful to say there are 12 in our group. I have 7 partners. We have 4 research analysts. We are mission driven to help owners to both maximize and monetize their life's work. And we're thankful that we can participate at that level with our clients.
I think that's really interesting, that point of the owner's life work, because it feels like that as an owner of an agency, right? It's you bootstrap at the start, and you work from a back bedroom, and you get into 5, 10, 15 years later into an office, and you have staff, and you're a lot of people rely on you, right? Tell me about the marketplace at the moment. Who's buying? Who's selling? What size of agencies are deals going through?
Sure. So first part of that question is the market. The market is down compared to a year ago. Yep. Certainly M&A transactions are getting done. We're helping our clients complete transactions, but it's not like it was a year ago. The uncertainty in the economy, interest rates being higher, sellers are concerned that they may not be able to get the valuation they were hoping or expecting. What we are seeing, that companies that still are maintaining their value proposition, their financial ratios are holding, meaning their profit as a percentage of their top line. If they're still growing, they're getting offers, respectable offers. The economy, it's not the interest rates as much as the interest rates may have affected their clients, which cut back their marketing budgets, which caused their earnings to go down. And that's creating a problem, because owners are either delaying their intention to try to sell, or the terms are changing. So we're seeing an upbeat because there's so much money on the sidelines, both through financial buyers, for example, private equity groups or family offices, and strategic buyers that are well capitalized. They want to make acquisitions.
Do you think, with the pandemic and that 2 years of uncertainty in the marketplace, that's changed the way that buyers are looking at agencies, right? In terms of, traditionally 3 to 5 years. How is that changed?
Yeah, it's a good observation. Before the pandemic, most buyers would look at a company and they'll say, I want to look at their 3-year weighted average or their 5-year weighted average. And they would put more emphasis on the trailing 12 months and not as much 3 years past. the pandemic hits, companies either did really poorly or some did really well because of the pandemic, but that doesn't mean those earnings or lack of earnings would sustain. So they come out of the pandemic, they get back to business. Buyers are going to put forth offers, and the sellers are going to say, don't hold me accountable for what happened during the pandemic.
Yeah.
Or they'll say, oh, look how great we did. So buyers, I mean, that's what they do. They'd say, let's look at, instead of a 3 or 5 year weighted average, what have you been doing lately over your trailing 12 months?
Yeah.
And they'll really look hard at your forecast moving forward.
Do you think it's easier to forecast now? You know, we're 2 years out of the pandemic, 3 years out of the pandemic. But in the US, the elections are coming up. Does that affect agencies and buyers' kind of moods?
Well, it's an interesting question because, well, David, when you first said, is it easier to forecast?
Yeah.
I think it's harder because, case in point, look what happened in 2023.
Yeah.
That so many agencies, they put together their 12-month forecast. They look great on an Excel spreadsheet. And then all their clients started to scale back. And their forecasts, they aren't meeting them. So it's that uncertainty that makes it a challenge. The lift because of the election, buyers are going to say, I can't count on that.
Yeah.
Yes, I'm going to every 2 years or every 4 years, there will be a lift. But it's hard to say because we're starting to see media buys and more work because of an election, they're going to discount that.
Right. Okay. So is there a sweet spot at the moment in the marketplace, the type of agency that is just, it's exploding, it's hot right now?
Well, there's certain types of businesses, but sweet spots are whether an agency is really strong in a vertical or a sector, or they've got really great capabilities, or they have a business model that just consistently performs as measured by profitability. You can get good offers on any of those. But if we look just briefly at, there's certain types of businesses today, influencer marketing, performance-based, account-based management. I mean, certainly data science, if they can still be found, results-oriented.
So who's buying right now? Is it the private equity? Is it the family? Is it groups?
Today, certainly depending upon the size, but at our firm, 5 of our last 7 transactions recently have been by strategics that are backed by private equity groups or backed by a family office. And that, fortunately for owners and stakeholders and marketing communication firms, these financial sponsor type buyers are pouring more dollars into this sector and into this space. And it benefits owners because typically a financial sponsor deal structure, the seller will get a higher percentage of cash at closing, and the upside opportunities will be greater in most situations than if they sell to a strategic buyer.
Okay. So with that, if you're buying to a private equity, their ambition is to grow the business. And do they then look at, if there's a group, you know, we talked about a platform, you know, agency, and then you have a bolt-on, their ambition is to grow the business with you as the owner within the business.
Yes.
Is that a long-term or is that a buyout over a 3-year period, or do they actually, hold on, we don't know how to run agencies, you do, and we want you to stay in the business?
Well, they certainly want you and your leadership team to stay. So that's going to be very important. In most situations, and I use the word most because they're a financial buyer that is beholden to investors, which a private equity group is, because they put out a charter, they raised money, their investors want to see a return on their investment within 4 years, 5 years, 7 years, because of the commitment from the private equity organizers, the general partners. They look to buy a company, grow it, enhance the value, and then resell it they call it their exit,
Okay.
typically within 5 years.
And who do they sell to?
It's a good question. They normally move up the food chain, and many times they sell to even a larger private equity group
Right.
or a publicly traded company.
And that's when the IPO.
Well, there's very few IPOs in the marketing service. It's usually larger. It's private equity groups that want to take it to even a bigger level
Yeah.
and have the resources to do that.
Are you seeing any, I mean, you're in the US.
Yes.
Do you work across other markets as well, or the US is your...
We're primarily in the US.
Okay.
We have relationships. We know of other groups similar to ours if we have a client that's in the EU or other, but we're primarily focused in the States.
Do you ever look at, or do you see interest from international coming into the US or vice versa?
Oh, completely.
Yeah.
Absolutely. I mean, some of our client companies we're presenting to buyers who are in the EU or in the southeast part of the world.
Excellent. In terms of, 2023, the number of deals that are happening, 2024 is coming up. Is there a stability or is it a growth market for sales? Because, during maybe the pandemic, people are rushing to sell, not knowing what's going to be coming up next. What's the market looking like in the future and like tomorrow?
My opinion, my partners and I talk about this often. We're optimistic. I'm going to say cautiously optimistic that 2024 would be better than 2023. I mean, 21 and 22 were some of the strongest markets that I've seen in 13 years.
Yeah.
The quality companies got sold. Buyers, the funding's still there, though. More and more money as a percentage of where investments go are going to private placements, private equity groups. Family offices had a great run. I mean, there's capital to invest. A lot of quality companies already monetize. So those companies coming into 2024 that have good margins, that have an investment thesis that can excite people, that are growing, that did not go out of style just because interest rates are higher.
Okay. Interesting. Great. Thank you very much, David.
Thank you, David, for having me.
Yeah, for sure. Thank you.
Thanks.